Hello, good morning and welcome to ET Now's Buy Now, Sell Now. With me, Varun Hirimath, and along with me, Karanya Rao. She's running a bit late this morning, so we'll just wait for her to join us. And in the meanwhile, let me walk you through the headlines for this morning. So it's expiry day, of course, and that's going to keep the focus of the markets on what's happening with respect to options. The Nifty, however, has reclaimed 11,600 earlier. Now we're flirting with that line all day. And tall gains for Realty on the back of that GST, or rather cess cut. Next thing we have on the agenda this morning is just the rock-solid rally in Realty. So Realty stock surge after Maharashtra government cut stamp duty, So that was what the relief is on account of, I believe, by a couple hundred basis points. So that's got stocks like Godrej Properties, L&T Finance on the financing side, maybe even a Piramal Enterprises in focus. Then the next big one for today is the stormy GST meet. We have the GST Council that will be taking up the state compensation issue, and that's something that's going to ultimately impact our economy and market significantly. An important board meeting as well for this morning, Edelweiss, with their Q1 also expected to be out today. The street is also awaiting the PAG deal announcement that we spoke to you about earlier. Some commentary on that will be appreciated. And then finally, in terms of what's happening globally, the handover was fairly strong last night. The tech stocks once again proved their worth. And now, today, the focus will shift on in Powell's Jackson Hole speech. So Jerome Powell of the US Fed will be talking at 9 a.m. Thursday time. So that should be this evening for us. And it'll be important to see how the US markets react to that. Speaking of markets, let's go over and take a look at how the indices are faring this morning. We have the Nifty 50 actually up a decent 0.4%, so that's not bad at all. 0.5, 11,605. The breadth is in favor. We have 31 stocks in the Nifty advancing, with just 19 declining. In terms of what's winning and losing, stocks-wise, IndusInd Bank continuing its charge up a solid 3.3% today as well. It's really done well over the last couple trading sessions, more than 10% gain cumulatively. HDFC also following suit today. That's HDFC Limited, up a solid 3.2%. Cipla, which we'll be talking about later on the show, well, Kunal will, that's up a solid 2% and at 763, perhaps heading higher. Then you have an SPI 213. So really now you're seeing almost a 5% gain post when those brokerage updates first came out. Tata Motors, the second that deleveraging commentary came out, we've seen a sharp uptick that's continuing even today, up nearly 2% at 140. So that's what's winning. Among the losers, you have two auto stocks retreating. You have a Bajaj and a Hero Motor, both down over 1% today. You have an UltraTech Cement also down today around 1%. And then you have the Bajaj twins, Bajaj Finance and Finserv, both down about 1%. So that was how the markets are panning out, but we'll bring you more updates throughout the show. For now, let's go across to Vivek. Like we told you earlier, massive relief for the realty sector. Vivek joins in with more.
Well, this could be a significant development as far as the entire real estate space is concerned, especially in the state of Maharashtra. Now, what the government has done is that the current stamp duty rate, which is at 5%, has actually been reduced to 2%, and this particular move will be effective till December 31st of 2020. Now you're talking about quite a significant development. This move mainly, the government is actually foregoing quite a bit of revenue. However, this particular move is expected to aid investor sentiment and is expected to push people who are looking to buy homes but are sitting on the fence on the back of higher regulatory charges as well as tax as well as GST related charges. So now what analysts are expecting is that the stamp duty rate cuts, coupled with ongoing discounts and other freebies that a whole host of developers are offering in order to get rid of excess inventory in the system, could actually help the housing sales. Remember, the festive season is one in India, especially where you see quite a bit of housing sales pick up. You're actually looking, in case you're doing an analysis, you're talking about a flat, mid to small income flat. You're talking about 75 lakhs being the worth of the flat. In that particular case, this particular move, 3% cut in the stamp duty, will actually result in an approximate 2.25 1.25 lakhs of saving. Affordable as well as mid-segment properties are the ones that are expected to see most amount of traction. Goldman Sachs is quite positive on this particular move. They're saying it will be quite positive for the sale of ready inventory. They believe that this particular move reduces the price of ready units. And what they're also saying is that this particular move could help restart demand. However, they feel that this particular move may not be enough for under construction property as GST is still applicable.
Thanks, Vivek, for that update. Meanwhile, as the Maharashtra government is planning to reduce the stamp duty on flats from 5% to 2%, we spoke to Niranjan Hiranandani and tried to understand the tax relief for realty sector. Listen in.
See that they brought it down to 2%. It will make a huge difference in terms of the demand position. We already had in the last 3 weeks a lot of inquiry levels, but people were on the edge to decide and not decide to buy. I think this is going to bring back demand and real estate. If it comes back, when it comes back, you will see a multiplier effect in 269 industry. So I think for first time, Maharashtra government has taken the initiative to bring a demand push, which was very necessary. We have also asked for GST cut from the central government and also the GST Council. And we are hopeful that something will happen there, not only for real estate, but also for the other industries in order to see that the demand is pushed across. So whether it's automobiles, whether it's real estate or others, the GST cut across the board will make a huge difference. And I promise you, you'll see January, the economy will spring back irrespective of everything. This is really a medicine bigger than the COVID medicine that you have for the purposes of the economy. So this is the first demand side COVID vaccine that you have given to bring about the economy. So I consider the cut as a vaccine for the economy to manage the COVID downturn.
All right, let's move on. And before we touch base with our guests, let's pull up the buy now, sell now stock cloud as well to understand what are the stocks that are in the limelight and you should keep on your watch list as well. Starting with M&M, we had the management as well earlier on in the day. Their commentary was fairly strong. They're looking to play by their strengths for the auto business, and of course, the tractor commentary and the tractor outlook continues to be very, very resilient. They last evening announced a tie-up with REE, which is an Israeli firm, to explore manufacturing CVs within the electric space. So that's an update as well. And M&M, one of the top gainers on the benchmark index. Moving on, you also have an ICICI Bank. Of course, this is primarily been in focus on back of that news as well. Which was announced last evening not only by ICICI Bank with regard to approval of about 64.4 lakh equity shares, but ICICI Securities had also updated the exchanges about that. This is going to be done through an open market sale, and it also represents up to 2% of issued and paid up equity share capital. Next up, you have some Maharashtra-based real estate companies as well, which have a significant exposure to the Maharashtra realty market. Marathon NextGen, Godrej Properties, soaring in trade on back of that rate update, which the Maharashtra government is looking to reduce on stamp duty. HAL in focus as well. We had some updates coming in last night as far as the OFS is concerned. It's going to happen from 27th, which is today, till tomorrow, 28th. Share sale will be happening at a floor price set at 1,001 rupee per share. Another stock in focus is Ramco Systems. Bulk deal action taking place on that counter. You have HDFC Mutual Fund buying a little over 1.5 lakh shares in the company. Godfrey Phillips continue to be in focus as well on back of some duty revision that's likely to happen as far as tobacco companies are concerned. So that's an update that's keeping Godfrey in the limelight, and the stock has been on a tear since morning. Edelweiss board meet in focus. The stock is very much in the limelight. GMDC handed in their report card last evening. It's been a decent set of numbers. Profits grew, and even this is despite a very, very massive downtick that they've seen in the top line growth. Another stock in focus is Alembic Pharma on back of that US FDA approval that they received on an important drug this morning. So these are a host of stocks that we are watching out at the top of this hour. Let's touch base with Kunal Bothra and Ashish Maheshwari to talk about their view on the markets and for addressing some viewer queries. Hi, gentlemen. Good morning and thank you for joining in. Kunal, coming first to you. With the benchmarks once again inching higher, we had Nifty briefly above 11,600 as well. Where do you see we are headed?
I think we are headed higher. There are no two doubts about it. But the only concern is, that how long can the markets rise up with stocks like Reliance, etc., not participating. So yesterday, Reliance, of course, had a very good day. Today, it's having a bit of an off day. It's a bit flattish to slight positive in that respect. So I think that's going to be interesting to see. And this is an incredible market because it's not seeing any kind of correction, so not even a 100-point or a meaningful 5% kind of a correction, which is generally a norm for any kind of a trend. When you see a 15%, 20% kind of a rise on the index, there is generally an intermittent correction in between. But this market, has just been on trot. I think today the expiry action is something which is going to be interesting because I think there's going to be a lot of carry forward positions for the next expiry. The sentiment is positive for many of the stocks and sectors, and that carry forward sentiment for the next expiry could be something to watch out for. So maybe the data post the closing today could probably throw in a lot of light for the overall trend for sectors as well. But net I believe that it's positive. Now if I go with the individual stocks which I'm recommending, then I'm recommending two buys over here. And the first one is about Cipla, apparently. Now, after almost a 10% correction, the stock has come back to some positive swing. I believe that now the stock should chart up a new uptrend for itself. The mean reversion process is over for Cipla, and I would expect that the stock can come back to an 800 plus kind of a level over the next couple of weeks. So that's a buy. Targets of 800, stop of 740. The second would be a buy on SBI. Now, yesterday and day before as well, I was indicating that how this 210 mark for SBI is a very, very important resistance. And, till the time the stock doesn't break past those resistances, it's going to be difficult to categorize a breakout. Today, the breakout has finally happened for SBI. So I believe that that's a very positive sign for the stock price. Would suggest a buy with a target of 225 since the stock has moved up higher, and stop loss could be kept at 209.
Okay, thanks for that, Kunal. Ashish, coming to you as well. Good morning. What's catching your eye in the market this morning?
Yeah, couple of stocks which I've identified which are more trigger based, which can be bought at this level. First is L&T Finance Holding. I think one major trigger in this stock is and in the end of this month, this moratorium is getting over. So whatever the issues related to moratorium was there in their lending are going to get over. So as far as L&T Finance Holding is concerned, this is quite underperformed because if you see 52-week high was 130, stock is now still 70 because of concerns in their asset quality. But in my view, company has made enough provision because of losses due to COVID, etc. And once this moratorium phase is over, they are going to bounce back. Another thing is this company has shifted their focus from wholesale lending to more rural kind of lending. So even if you see the last month, they have sanctioned almost 10,000 crore worth of loan and 10,000 plus tractors which they have funded. So a holding company where you are getting almost 7 businesses, in my view, you can't go wrong now from here in L&T Finance Holding. So this can be bought for 6 to 9 months time horizon. Another stock which I like is a company into real estate. It's called Karda Construction Limited. As we were just discussing that Maharashtra government has reduced stamp duty from 5 to 2%. This is going to be a major boon to all real estate developers in the state of Maharashtra. And this being a Nasik-based company where which is one of the highest growing cities in Maharashtra, they stand to gain. They are having almost 3 million square feet real estate projects under construction, which will be get delivered in a couple of years. So in my view, this time to look at some good quality stocks where there are no pledge, debt is under control and cash flows are going to be good. because they run in mostly affordable housing space where 50% of their revenue comes from there. So this stock can be bought with a price target of 130 in mind, and a stop loss of 80 is advisable.
Thanks for that, Ashish. Let's now get a move on with our queries for this morning. And our first query, which was given to us via Twitter, is from Nandan Rao of Bangalore. And he wants to know if it's a good time to invest in Wonderla Holidays. So, Kunal, let's get the technical view on Wonderla right now. Is it a good entry point?
Well, I think if you're looking to buy the stock, then maybe at current levels or slightly lower is where you can look to buy. It's a chart which has recovered just in the last, I think, 2-3 weeks. So August has particularly been a month of, mid caps, and I think in that regards, many of the mid caps which were sleeping, underperforming, they were the ones which managed to wake up and started to outperform. So Wonderla, Holidays in the charts for it is one of the similar kind of a mid cap names. So from 130, the stock is now at 180, 190 levels. Maybe I think the stock provides a certain sort of a dip, comes back to say 175, because these high beta stocks, they tend to give a sharper correction as well. So if you can buy the stock at lower levels, that would be a better opportunity for you to buy. But then I think the question which you have to ask is whether you are playing it for or whether you want to keep it for delivery or the long-term prospect or not. I think that should be a very important question, because what happens is in a market scenario like this, a lot of the traders and investors, they want to jump onto those high momentum, high pacey stocks, and they would eventually want to be left out with the losers or the ones which have been significantly underperforming stocks over a longer term period. So don't make that kind of a mistake. I think so. So the strategy has to be very simple. If you're buying such stocks, you have to try and play momentum. But if you're looking to invest into names, then I believe you should go back to quality stocks, and especially the large cap ones. So I think you have to try and pick and choose the kind of time frame you're looking at. For Wonderla Holidays, I think a 170, 175 range could be a good range where you can enter for short term trades.
All right. So Kunal has his own set of reservations when it comes to Wonderla, but he's picked out a range for you in case you're still interested. Moving on, Ashish, what is your sense on Wonderla, given how the entire travel tourism sector is impacted? This one is in the business of some adventure parks and theme-based parks as well. So how do you see the fundamentals playing out, and do you think now is a good time to invest?
In fact, if you see the last June quarter numbers, sales was almost zero. And in fact, in this quarter also, I'm not expecting the numbers are going to come back to their previous numbers, pre-COVID numbers. And whenever the holiday park will start, again, you need to give a lot of discounts, etc., to attract people to come to your parks. So my view is to avoid this stock. In my assessment, it will take at least 1 year for such companies to again come on track. And if you see 52-week high was 300 and low was 100. So if we need to buy this stock, we'll buy it somewhere at 100, 120 levels. Because in my view, this quarter also, you are not going to have any good results. So as soon as this quarter numbers will come, you are going to see correction. Instead of this, I suggest, why don't you look at SBI? Because in next 1 year, particularly PSU banks are going to lead this market. So I suggest you go with the leader, which is SBI. From here, I'm not expecting any downside now in SBI. And quarter over quarter, you are going to see very good numbers. So if a new stock need to be bought, SBI is going to be one from my side.
Well, there you have it. Both of our experts are a bit cautious about your investment idea in Wonderla. So I hope their recommendation is of help and you can take the right decision based on that. Moving on to query number 2, which is also an email. Arjun Patnaik writes to us from Mumbai. He wants a long-term view on Hindustan Foods. Kunal, How do you see the chart for this one? If you look at the last couple of weeks from 640 odd levels, the stock is now gained about close to 100 rupees. Over the medium to long term, which way do you think it's headed?
And as I said, that many of these stocks have jumped up, on the back of, momentum and on the back of this mid-cap rally doing pretty well. So I think in that regards, Hindustan Foods and many of its other peer names as well, they've also managed to perform in a very similar kind of a fashion. I would expect that, have a very short-term oriented view over here until unless, I think, I think maybe an Ashish could probably throw in more light on the fundamental parts. But until unless there is significant amount of story into these names, I would, urge the investors and the viewers to, sort of stay away from these stocks from a longer-term view. Ride it as how the momentum plays by, and the momentum continues into these stocks. You can stay invested, have some strong, support levels as well as, stop loss points for these kind of names. So because the rise has been, the spike has been very steep and sharp, the correction as and how it happens and whenever it happens would also be more sharper. So you don't want to be left out with the stock at the upper end of trading ranges. So yes, you can look to buy the stock at lower levels, but again, the caveat is that look at it from a very, very short-term trading perspective only.
All right. Thank you, Kunal. Ashish, what's your take on Hindustan Foods?
If you see their June quarter numbers, it was quite robust numbers, and we have seen a very decent run-up in the stocks, in this stock from 380, 390 levels to present level. Again, the rationales are, particularly first, we need to see the business model of this company. This like a diction of like how electronics like businesses are doing well. This is something like diction to food industry. So you name the company like HUL to ITC to Colgate, or to Dabur to Imami, everybody makes their products made at factory of Hindustan Foods. So this is a typically outsourcing kind of a story. And if we are bullish on FMCG back, Hindustan Food will continue to do well. Only I echo the apprehension of my fellow analysts as the valuations are really very, very rich. So at this point of time, I'll not advise to buy this stock. I think 600 to 650 is something which investors need to keep in mind to enter in this stock. Fundamentally, things are okay. High promoter stake, low equity. So stock is not going to tumble now anymore. But as there's a vertical run up in the stock, so I'm slightly cautious at this price point.
All right, Ashish. On that note, a big thank you to both of you for joining us this morning. We've come to the end of the query section. And it's also time for a quick break here on Buy Now, Sell Now. Be back soon.
Welcome back. You're still watching Buy Now, Sell Now. Even though the market has given a thumbs up to FM's comment saying there's merit in GST cut on two-wheelers, dealers and automakers are worried that festive sales could be impacted if customers decide to postpone the purchases in anticipation of a cut in GST tax rates. A similar situation had taken place last year when hopes of GST cut on four-wheelers was emerged. While rates were not cut, anticipation of a drop in rates definitely impacted sales. How are things panning out right now? What are the key concerns that dealers have? Utkarsh is here to fill us in.
While on one hand, the comment by the FM Nirmala Sitharaman really got a thumbs up from the market and all the auto stocks were in green. But if you look at a situation on the ground, when you speak to automakers, when you speak to a lot of dealers, what you get a sense of is that there is a fear, there's a negative fear as well. Now, what is the fear about? You can speak about the fact that it is the industry which has been asking for a GST cut, and a mention of that should really cheer them up. The problem which the industry had at this point of time is that the anticipation of a GST cut has been built up now, and till the time there is no clarity on whether it happens or not, what will happen will be that many people will not go ahead with their sales, and they'll be keeping their sales, they'll be postponing their sales at a point of time where already the industry is going through a bad time. Now, if you look at even the possible estimated cut into a normal two-wheeler, which is ranging from 50,000 to 1 lakh. It can be somewhere around 4,000 to 8,000 rupees, which is a big amount, and that is why many customers would like to wait and watch and get some clarity on whether a GST cut is happening or not. Even if the cut happens, September, many dealers now tell me, can have a big impact on the expectations of the GST cut. That has happened earlier as well. If you remember, the same month last year, there were talks about a GST cut. Industry was waiting. There were comments from the industry. There were comments from the ministry. They are looking at it. It didn't happen. What happened finally was, again, a washout September. This is what the automakers are really worried about, that it might repeat the same thing going forward in the current scenario as well. Even though the cut happens or not, September will bear the brunt of the comment and the expectations of a GST cut from Nirmala Sitharaman, FM and the government.
That, Utkarsh. But on to a very important development. The centre and the state are likely to clash today over the GST compensation. States are likely to push the centre to borrow from the market and suggest that the compensation cess is levied on more products to raise funds. My colleague Ruchi is now with us for more.
Let's get straight into this. We have a fascinating panel. Amitabh Chaudhary from Axis Bank.
Unfortunately, that we've lost the line with Ruchi. We'll try and reconnect with her. In the meanwhile, let's go over to Jayesh because it's August series expiry today, and Jayesh joins in with the detailed analysis.
The August series has been a good one for both the Nifty as well as the Nifty Bank. Both of these indices have managed to gain for the third series in a row. Also, if you have a look at the market rollover picture, that has been quite robust. The Nifty's rollover stands at about 65% as compared to 60% 3-month average rollover, while for the Nifty Bank, it stands at 54% as compared to 3-month average of 52%. Also, if you have a look at the sector performance, the broader market space has been doing extremely well. Both the Nifty mid cap and the small cap index are set to perform more than double-digit gains for the August series itself. The leader has been the media sector, which has gained more than 20% for the series itself. And some of the other sectors that have managed to clock in double-digit gains for themselves would be the media as well as the real estate and the auto pack as well. The two sectors that have not performed well are the IT as well as the FMCG pack. Both of them have managed to underperform the Nifty as well. The India Wix index that has declined more than 20%, and this is one of the worst performances that we have seen from the India Wix index as well. Now, if you talk about the individual stock gainers and losers, we have quite a few auto names that feature in the gainers list, the likes of Ashok Leyland and Tata Motors, which have managed to gain more than 30 to 40% each. Also, Adani Enterprises has gained more than 60%, while Z Entertainment from the index stocks has gained more than 50% for this series itself. And you have JSW Steel also, which has gained more than a third of its value as well. The stock losers, talking about those, you have a lot of high beta names, the likes of Bandhan Bank and Muthoot Finance, which feature in this list. And you have Bharti Airtel and HDFC Life from the index names, which have also contributed significant losses in the series, August series itself. However, it is interesting to note that there are three additional stocks which go out of the F&O space effective today, which is Century Textiles, Ujjivan Financial, as well as Equitas Holdings.
Thanks, Jayesh, for that. Ruchi is back with us. Let's take it across to her with respect to the GST Council meeting. Centre-state clash is quite likely today over GST compensation. States are likely to push the centre to borrow from the market and suggest that the compensation cess is levied on more products to raise funds. Ruchi, what are you gathering on this front?
Well, absolutely right. The battle lines are already drawn even as the 41st GST Council meeting has begun. And just ahead of that, 24 hours ahead of that, we did see the Kerala Finance Minister yesterday tweeting about it. All the opposition leaders trying to come together on the issue of GST compensation shortfall. And the West Bengal Finance Minister Amit Mitra also penning a letter to Finance Minister Nirmala Sitharaman saying that the state's worst fears have come true. Remember, when the GST was implemented, the states were promised that they will be getting an annual 14% revenue return as well. However, given the fall in the GST revenues, given the slowdown in economic activity, and of course the COVID pandemic as well, that have led to a contraction in the GST revenue shortfall, and that has led to a contraction in the compensation kitty as well. And which is why, Karunya, it is important to note that what are the options ahead of the GST Council. One of them, of course, is whether they should go ahead and borrow money from the market, given the fact that the GST Council itself does not have any backing. Either the states or the centre can borrow. The centre is asking the states to go ahead and borrow the money that they currently have as a shortfall. The states are unwilling to do that because they feel that this is going to increase their debt servicing liability, and this is going to mean that they will need to cut their own state expenditure. So, of course, you can expect fireworks in this meeting. Some of the other suggestions that were on the table was to increase the cess on sin goods such as tobacco. Of course, one needs to see whether these issues will come up in this meeting today. The second option on the table is whether some of the cesses that are currently not devolved under GST, if they can be transferred to the compensation kitty. So various options on the table, all issues will be discussed through and through. But remember, the Goods and Services Tax Council, the GST Council, was always a body that took unanimous decisions, collective decisions. There was a lot of talk about federal cooperation as well. That basic structure of the GST Council is now under threat given the issue of the compensation cess shortfall.
Gee, thanks for that very important update and all-important meeting, and I'm sure we'll be bringing you more developments once we hear what exactly transpired there. But switching gears a little bit, earlier in the day we spoke to Nilesh Shah, the MD of Kotak AMC, and asked him about how an investor can build his or her portfolio in the current market conditions. Let's listen in.
To some extent, that has become a bit difficult to predict because there is enormous amount of retail participation. More than 40 lakh new investors have opened their Demat account, and mostly all of them are operating in the market. Momentum can, lift any boat, but when the tide turns, then only we will see which one was the right boat. In our opinion, following characteristics are necessary for a company to outperform on a sustainable basis. One, the company's balance sheet should be in good shape. That means it should not be extremely leveraged. Second, company should have cut costs dramatically due to COVID-19. At the end of the day, markets will value fundamentals and the profitability. And right now, when activity levels are stagnating at around 85 to 90% of previous year's level, it's extremely important to cut costs when your revenues have fallen. The third thing will be related to leadership position in a segment. In telecom, we have seen from 13 players to 3 or 4 players. In banking, at least in PSU banks, we have seen from number of PSU banks to few PSU banks through consolidation. What happened in telecom sector, what happened in PSU banks will happen in many other sectors. And hence, the company in which you are investing should be probably top 5 players in a particular sector. So leadership, ability to cut cost, and good balance sheet will be prerequisite for stocks to outperform on a sustainable basis. And this is with a caveat in mind that Robinhood investors' momentum can lift any boat, but it will not be able to sail at that level for long.
Okay, time for another quick break here on Buy Now, Sell Now. Back with more shortly.
Welcome back. You're still watching Buy Now, Sell Now. Earlier in the day, we spoke to Anthony Pompliano of Morgan Creek and tried to understand if the FANG-led rally will sustain. He also shared his outlook on gold, whether it's set for greater returns or not. Let's listen in.
Yeah, I think that what you're starting to see is companies have stayed private much longer. And so that was because there was tons of venture capital available in the private markets. But what you all have seen over the last couple of weeks and even a couple of months is whenever you get these raging bull markets, companies want to race to get into the public markets. There's inflated valuations, and they can basically go out and in a less dilutive way, put a lot of capital on their balance sheet. And so, with Airbnb, like what's interesting is the company actually got hit pretty hard by the pandemic. Obviously, people just weren't traveling, but they're still going to try to get out into the public markets because it's so compelling to do that, given that environment right now. And so I think you're seeing a lot of these companies do that, whether it's through traditional IPOs, SPACs, direct listings. It's just if the market's going to give kind of these inflated valuations, of course, there's a financial incentive for people to get into the public markets. And that's what we're seeing them try to do. Yeah, look, I think that the thesis for gold has remained the same, which is essentially that anytime that there is a lot of quantitative easing, people are going to seek out sound money principles. And so both gold and Bitcoin have those sound money principles. I think where gold and Bitcoin investors kind of diverge in thought process is how to allocate to those applications of sound money principles. So I think a lot of gold investors would say, look, gold's been around for 5,000 plus years. It's very kind of conservative in terms of risk. And so because it is conservative in terms of risk, you're going to get a return, right? It's up 20, 25%, it's up more than stocks, all that kind of stuff this year. But what you're not going to get is kind of the explosive growth that something like Bitcoin can provide. And so Bitcoin is riskier, and therefore you get paid for that risk in terms of the potential return. I think gold is more conservative. And even though you're going to get a lower return, in my opinion, than you will in Bitcoin, it's still going to do well because the macro environment just simply incentivizes people to go protect their wealth. And so whether it's gold or gold stocks, I think that there's a lot of people looking around saying, I need to somehow get an inflation hedge, and gold is a place that you'll find a lot of capital flowing to.
Okay, that was a really interesting excerpt. But switching gears a little bit, here's an ET Now exclusive. A tourism task force has been set up by the Modi government to revive the sector, and a high-level inter-ministerial meeting has been scheduled on this very subject. All of this a day after Finance Minister Nirmala Sitharaman revealed to India Inc. that new steps or SOPs for the hospitality and tourism sector are very much in the works. Karishma Asudani, who broke that story, joins us now with more.
Well, right, it's a big one that's coming in, and what we are picking up, like you mentioned, that it's a tourism relief that the country is going to get. The sector that has been facing maximum disruption because of COVID-19 pandemic is finally going to get some kind of access. In fact, what we are picking up from sources is an inter-ministerial meeting was held where various important ministries have discussed on opening tourism for foreign nationals by the month of October, so that there is some kind of movement and development of hospitality scene in the country. What we are also picking up is that certain kind of recommendations have been sent from various ministries, where aviation has proposed of chartered flights and tourism air routes under the Udan scheme. Well, chartered flights has been one demand that the industry, in fact, a lot of private airlines were also asking, so that foreign nationals could fly safely into the country because of the existing ban on international flights. Well, we're also learning that Ministry of Home Affairs is looking into providing certain kind of relaxations on tourist visas and certain kind of specialized visas for people who want to visit pilgrimage sites, and especially want to get an idea of the Buddhist culture and the Buddhist sites that exist in the country. Well, we are also picking up that Ministry of Road and Transport has also put in a proposal, and on agenda is providing easy interstate connectivity between states and also working on a better transport system for foreign travelers. Besides this, the basic stance that new health protocols across all the tourist tourism sites. Well, this is all going to be coming as soon as October because the government is planning to uplift it and allow foreign nationals to visit India. Pandemic is not going anywhere, and government says, and my sources hint me that we have to live with this kind of scenario, and tourism is one sector which is important to revive because of the downfall hospitality has been facing. We've got you this big one on ET Now.
Thanks for that, Karishma. Government's tourism task force met yesterday and discussed ways to promote the tourism industry, which has been hard hit by the COVID pandemic. We spoke to Make My Trip CEO Rajesh Magao and asked him what he makes of this move and whether there's any short-term measures to help the sector. Here's an excerpt of that chat.
We will have to continuously keep kind of representing our case and seek more immediate tactical help as well, because that is what would be needed at this point in time, whether it is on the liquidity front or it is, the cost optimization front or, relooking at maybe GST or maybe relooking at, let's say, ATF as being part of the GST and so on. So they've been actually very well articulated, long list of industry demands that are out there. Now, the question really would be, which are the ones that, given the overall situation in the country and the resources and the prioritization that we have from the government side is something that industry will be able to get. But whatever will be able to, whatever industry will get will be more than welcome at this point in time, even from an immediate resolution standpoint, while the long-term investments can come in from the, fundamentally improving domestic tourism or promoting domestic tourism over the years.
Okay, slipping into a break here. More updates when we come back. Stay tuned.
Welcome back to Buy Now, Sell Now. In a special from M&M Week, which we've been having, we spoke to Rajesh Jejurikar, Executive Director of Automotive and Farm Sector, and tried to understand if rural demand is bouncing back. Here's a slice of that conversation.
Yeah, so we have, April, of course, everyone was in shutdown, but end of April, tractor dealers have started opening. May saw a growth, and both June and July have seen a very, very significant growth in the market. We are at close to 100% capacity and still running short of stock. In fact, we opened July with our lowest probably ever system stock at this time of the year, and which includes stock with dealers and stock with us. So even though we are at full capacity right now, we are expecting festival season demand to be very strong. And our major challenge right now is not on the demand front, but making sure we have enough material available as we get into festival season. So, all the positives that I spoke about on the rural demand side are translatable and visible in the tractor demand momentum.
Okay, so let's talk a little bit more about the tractor demand, the kind of models as well that you've already introduced, the kind of success you've seen on some of them, and what perhaps is in store now going forward when it comes to that segment.
Well, on the Mahindra brand side, we've introduced something we call the XP Plus series. And that's actually an upgrade of two of our very strong brands and models, the old Bhumiputra and the Sarpanch. And the response, we introduced that starting January in a phased manner, but it's now available nationally. And that has seen a very, very good positive response. Some of the shortcomings of the previous models have been completely taken care of. And we now believe that our portfolio is very strong and very competitive. So that's on the Mahindra brand side, and that's more in the short term, and that's already happened. As we go forward, we've invested in something we call the K2 platform. and actually K2 is 4 platforms, lightweight platforms being developed for India, but also for global markets. And that's a collaborative project that we run between our associate company Mitsubishi in Japan, along with our engineering teams here at MRV in Chennai. And that the first of those platforms should be launched a couple of years from now, and then others should follow in quick succession. That I think will make us very competitive in global markets, specifically North America, within the Japan market itself, other markets in Southeast Asia. So again, that's one of the significant things we're doing. Just if I may take a minute and add on, one very important initiative, and we believe that to be almost like a strategic moat that we're building, is what we call farming as a service. And we branded that Krish E because it has an on-ground presence as well as a digital play. And we've integrated various initiatives that we were doing in this space. We had Samriddhi centers, so they become Krishi centers, precision farming, rental models. So all of these fold into the farming as a service business vertical. And we believe that that is something which will allow us much greater engagement with farmers and moving our model from just selling machines to selling overall solutions to farmers. And we really believe that's future-proofing our business.
With that, we're timed out on this edition of Buy Now, Sell Now. We're going to wrap it up. Thank you for watching.